Welcome back, everybody. Hopefully, everybody's had a good Christmas, and hopefully, the year is off to a decent start this far for everybody. So lately, I've been looking at Jade Cap's newest take on the strategy that he used to make millions of dollars and get the record on the prop firm payouts. So I've been applying that for a while, been testing that. Before we dive in, let's just take a look at the daily chart here. We can see that we traded back into a new week opening gap here from the 21st November 2025. We traded back into that, respected that level, traded up higher. Noted a 4-hour order block right there. We traded into that, tapped it, tapped that level sitting right there. That's pretty much what we're looking at right now. As far as bias here, I still want to be bullish overall on the higher time frame. Still pretty early in the year. We haven't really gained any major major momentum yet. Things are still a bit slow here. Calendar's looking pretty dull. We got prelim, UAM, consumer sentiment, and we had non-farm pay. Non-farm pay got canceled, I think, due to the government shutdown stuff happening over at the U.S. That's slowed down the market quite a lot this current week as well. With all that going on, for this first week, I'm expecting mainly bearishness. If you go look at the seasonal tendency of Nasdaq, and you look at the first week of Feb, your 5, 15, and 24 are pretty much in a stagnant consolidation, with the 5-year pretty much rallying down lower on NQ. And then on the dollar index, we have dollar being rallying down, forming a low, and then from there on starting to rally up higher, reaching into the first week. That's what you would expect to see happen on dollar. And if we look at dollar on a daily chart, then you will see that dollar has been rallying up higher, slowly but surely. So it seems like we are respecting this seasonal tendency. So I am looking for lower prices primarily in NQ, which thus far on the daily, we have been getting that this past week. We've had quite a couple days of rally lower. So retracement is expected. We're into that 4-hour order block. So that kind of puts me in a bearish bias as far as where I want to see this thing go to. As far as targets, we do have these equal lows down here and these old lows down here. I'll explain in a minute what all this stuff really means here, but it's basically my take on Jade's understanding, and this is just how I'm marking it out. We have these equal highs above here as well. Okay, anyway, some things up here. That's why we're on the hourly chart. Just to give a little small explanation on what Jades said. Starting it off with, you need to know what a uh, high or a low in the market is and how to define that. So I believe everybody here, or most people here, should know what that is. But for those that don't, then let's take this example here. So short-term high. Pretty much you're looking at a high with a lower high to the left of it and a lower high to the right of it. Okay, so it's a clear high in the marketplace. Now let's look at 8 different examples, since this is pretty much a wick there. So it's not the best example showcasing, but let's look at this low here. See, we have a short-term low, and you have a lower body candle to the left of it, and a not a lower but a higher body candle to the left of it, and a higher body candle to the right of it. Okay, so that's a clear uh, low right there. Let's find an example of a high, clear high here. So like right here, this candle here, you got a lower candle to the left of it and a lower candle to the right of it. This is your highest candle, which would be a high in the marketplace. So that's how you define your swing points or your highs and lows. And then we have, you got to look at session times here. Jade specifically talked about Asian range being from 8 p.m. Eastern to 12 a.m. Eastern time. You look for highs and lows in that time and you mark them out on the chart. Only the ones that are not yet traded through. So, an example of an Asian level. So, this is Thursday, yesterday's trading. We can go ahead and look here. This is pretty much 1900. So, it's about 7 p.m. So, it's an hour early. So, this is I would classify this as an Asian low. Okay, clear low right there. Another one right here, 2300. That's almost midnight. So, I classify this one with the higher candle to the left, higher candle to the right of it. Pull that through. This is all done on the hourly chart, by the way. He specifically tells you analyze on the hourly chart. You mark out the levels on the hourly chart, and the only time you drop down to a 5 minute is for execution. And we'll get to that, but let's let's work through the steps here. That's an Asian low. Then you have your London range, which is 2 a.m. to 5 a.m. Eastern Standard Time. Now this London low here is sitting inside of 3 a.m. Pull that through, extend it through. There's a London low. It's not yet been taken out. Take note of that. None of these have been taken out yet. You also look for session highs and lows, previous day highs and lows. You mark those out as well. Lastly, you got New York from 8 a.m. to 12 p.m. Eastern Standard Time, which we know as the AM session, and that's your trading session. I've marked these out as AM highs, okay, or AM lows if there would be any, which there are none. You see, this is Thursday 9 a.m. and Thursday 12 p.m. These would be AM highs. Then something that I add to the list is I look at the PM session. So anything from 1 up to 4 p.m. that I would also mark out as a session high or a session low. So these are the levels. I'm pretty much looking for bearish price action here. So this is just sort of my take on this, and I'll do a proper video. Once I got once I got it figured out and how I want to use it and make it work in my way, then I'll do a detailed video on it. This is just like kind of like a coming back video, posting what's going on. I added this uh, high right here. This would be a kind of a late London high, but I just marked it out anyways, right there. I gotta say, this strategy it's been real slow, how can I put it? It's really kept me out of even considering taking positions inside of conditions that are just not ideal. Kept me out of trades that were not going to pan out anyways. And it's really, since it's on a 1 hour time frame, it's really a laid back approach, I would say. Just because you really gotta wait. So it takes a lot of time. You really gotta wait for price to do what it needs to do, and then trade through a level, right? And then turn right back around, and then you gotta get that confirmation candle close on the 1 hour before you even consider to go dropping down into a 5 looking for an entry. So it's really been a really slow approach. I guess I could say that it's kind of like it kind of like just negates the stress, and you're like you know what you're looking for. You're just waiting for it to just show up, and then you can just get in. That's the best way I'm able to put it. You just gotta go in your chart and you just gotta check it out and see for yourself. I honestly, looking at the 1 hour chart, and I haven't been able to find any specific trade using this model yet. Keeping in mind that I mean, it's NFP week, Monday, Tuesday, and you're pretty much done for, unless you're gonna take a look at Wednesday, which I didn't, and I didn't take a look at Thursday. I took those days off. I'm sitting down now. NFP is not gonna play out today, but I just thought I'd sit down and make this video and just look at the charts. By the way, we got some news at 10 a.m. here. We have prelim UOM consumer sentiment, so we got that rocking down later on. So that pretty much sums it up. You're not gonna be looking for anything before market open. And then if you're even going to get something good at market open or 10 a.m. But I honestly haven't found, keeping in mind AM session, I don't trade the PM session. I haven't found anything inside of the AM session that's met this criteria where I could say, okay, it's met the criteria on the 1 hour, and I got to go down to a 5 minute. I got to do an execution on it. I haven't, you know, so it really like it's a really good filter. That's the way I could put it. Best way I could put it. It's a really good filter. It keeps you out of a lot of unnecessary stuff. I'm just scrolling around looking. Let's take a look at Monday. That's way too far back already. Like Thursday, okay, 11. And I'm telling you, man, I've not found one trade yet that's met the criteria where we could execute. Like, I mean, look at that. Yesterday, 1800. We didn't take out any high prior. I mean, yeah, we took out the low, but we didn't reject and close it back inside that range. We continued trading down lower. Can classify this as a short term because it wasn't a short term high. You got a short term high right there. Didn't take out this one. This one's way higher. So nothing yesterday. Nothing in PM. Let's check Wednesday. Let's take a look at Wednesday just again. Wednesday 2 a.m. Okay, yeah, here. I mean, you kind of had to break out there and then come close back in the range. But I mean, you're not going to be sitting trading down. You're not going to be sitting trading like I mean, AM, Asia, Asia Sesh. Take a look at this here. It's 2 o'clock, 3 o'clock. It was on Wednesday. Take a look at that on the 5. But I mean, you're not going to be sitting down trading that. Wednesday, it was 2 to 3 a.m. Most of y'all ain't going to be trading that. So, yeah, there you go. If traded through it, but look at that. That's nasty stuff, dude. That's not what I want to see. Traded up through it. And then you gotta before you drop down, you gotta wait for it to close back inside that range, which it only did that at 3 a.m. See that? Only after this candle, that's your confirmation, and it needs to close back inside that range to show you that it wants to tank. So then you go to a 5 minute. That'd be at 3 a.m. right here. After you see this, then what you could use as a valid entry would be this fair value gap. That's all you got. That's all they give you is a fair value gap. You got a fair value gap, you got a breaker block, you got high, low, higher high. So last down close candle, you can use that as well. Plus the fair value gap. You can use that. And then you also got these up close candles, which could be used as an order block here. So, okay. So three criteria lining up. Time of day is 3:15. So you're trading inside of a session, right? Okay. Short position would be anywhere inside this range because 3 a.m. you're going to be looking for this to retrace, right? Because you're going to be sitting down, you're going to look at this. Boom. You're going to be waiting for retracement, look for entries. So this is a 5 minute. Obviously, the stop's going to be a bit more. So break your block, fair value gap, and then you got these down close candles. You just go ahead, put a stop above the breaker fair value gap, whichever one's higher. In this case, it was the fair value gap. You just put the stop, right above that, right about there, 0.05. So that's, don't get a lot of movement in Asia, right? So let's just see that is 6%. Yeah, 6%. It's barely much. Even holding through this, targets would be these lows, right? Take a partial there, but you're not again. Not much movement, so it's not gonna pay you much. Took that entry right there. You take a partial right there. Okay, it's 21%, which is not bad. That's about 10 handles right there. About 15 handles right down here. So that's not a bad setup, right? Not a bad setup. Just time of day, you're probably asleep. You're not gonna be seeing this. You're not gonna be awake for this. Come to the chart, it's over and done with. It's already moved. It's already done what it wanted to do. Gives you a second opportunity here. Trade into this fair value gap. Trades down. Rallies down more. But this would be the model. This could be a possible re-entry. You come, you see that it's done this possible re-entry, and that's pretty much it. There ain't gonna be anything else here that you're gonna be seeing. But that's an example of what you would be looking for. You'd be looking for price to trade through that 1 hour high or that old high, or look to trade through the high. Look for it to come back inside the range, and you need to get a closure on the 1 hour chart. You need that confirmation. You cannot drop down to a 5 minute if you do not have the confirmation. Okay? If you don't wait for that confirmation, that is absolutely where you will make the mistake with this approach. A 1 hour candle could very easily turn around and continue rallying up, and I've seen it this whole week. Continue rallying up higher through So wait for that closure, wait for the confirmation before you go down into a 5 minute. And again, this is a very, how could I put it? It's a very slowed down approach. So your patience is going to be tested. Okay. You're going to sit here. It's going to feel like you're watching paint dry. You just simply need to wait for the confirmation on that 1 hour chart. Don't sit there hopping down to a 15, down to a 5, down to a 1 minute, looking what they're doing. Okay, don't do that. That's not part of the model. The model says we're on a 1 hour chart until we trade through a high, we close back inside the range, and then, and only then, can you drop down into a 5 minute and look for execution. So that's very, very important, in my opinion. Very important. Stick to that criteria. Now, don't get FOMO thinking, oh, look at this. We've had a pretty big candle closure lower, right? Because this is another thing that's going to happen to a lot of people. You're going to look at this and you're going to say, oh, but what if it's like a big candle that closes back down? Because that's something that's going to happen to a lot of you. You're simply going to go down into a 5 minute and you are going to find an entry. The model says, wait for the candle closure. Candle closed at 3 a.m. Boom, closes. Not a minute before do you go drop down. Wait for that. That's what the strategy says. There's no fear of missing out there. As you see here, look at this. We retraced right back up. So you go in. So if it's a big candle and you can't wither the stop, you look for a possible entry. Wait for retracement. And you take an entry off of that. If it's a massive candle down and it rallies down a lot, let's say like 30 or I don't know, 50%, something really ridiculous, then that might just be a trade that you're not going to take because it doesn't fit your criteria of I do not take a stop bigger than X. Okay, that's your own criteria. Then you just can't take that. Obviously, you're going to be reasonable too. You're going to be reasonable. Look at what type of market are you trading something that's very volatile? Are you trading something that's not as volatile at the moment? Factors you got to take into consideration. But this is just the basics of it. It's a really nice, it's a laid back approach. It's really a laid back approach. You're really going to wait for that setup. You're only going to get one setup if you get it on the day. Really just takes the stress out of it. You're just sitting, you're just waiting for price to give you what you're looking for. And that's about it. But anyway, I'll get more in depth with it as I spend more time using it, more time back testing it, journaling it, and I'll see what I want to add to it. Add my own twist to it. So that's pretty much it. Hopefully, you found this one good and insightful. And this is pretty much where we're going at so far for the year. So stay tuned in. I'll be posting a bit more videos and I'll keep you updated. So until I see you next time, stay safe and keep trading.